The Precious Metals Week in Review, May 6, 2016. Brought to you by Precious Metals International. Disappointing economic data this week, particularly in the U.S. employment sector, appeared to be the primary driver for market moves as the likelihood of another interest rate hike slips farther and farther away. The number of Americans filing initial claims for state unemployment benefits surged higher for a second straight week, climbing by a staggering 17,000 claims to a new seasonally adjusted level of 274,000 for the week ending April 30th. Claims for the previous week were unrevised, and the massive surge to the upside caught economists who were expecting only a slight rise in claims by surprise. Last week's data falls outside of the reporting period for Friday's non-farm payrolls report and will not have any bearing on the statistics. Friday's U.S. non-farm payrolls report came in worse than expected, showing that the U.S. economy added only 160,000 jobs in April. The unemployment rate remained unchanged at 5%, and the labor force participation rate fell back to 62.8%, the lowest reading since January. February's payrolls were also revised downwards, dropping to 233,000 from the initially reported 245,000. Economists had expected the addition of 202,000 jobs in April, and the worse-than-expected report, combined with what is shaping up to be a weak second quarter for the U.S. economy, will likely place pressure on the U.S. Federal Reserve to hold off raising interest rates again at its next monetary policy meeting. Donald Trump became the presumptive Republican nominee for the presidential race after clinching a victory in Indiana this week. Ted Cruz and John Kasich, the two remaining candidates competing with Mr. Trump for the job as president, both suspended their campaigns following the defeats in Indiana. Trump's victory this week and the exit of the remaining candidates likely means the much-discussed contested convention scenario that could have resulted in Mr. Trump being passed over for the nomination will not play out at the Republican National Convention in July. Friday kicked off the Congress of the Workers' Party in North Korea. This is the first time the political gathering has taken place since 1980, when current leader Kim Jong-un's father was coming to power. Kim Jong-un will likely use the event to conduct yet another power shuffle, replacing the old guard that was in power under his father with a newer, younger generation that will likely be more firmly under his control. In the lead-up to the event, weddings and funerals have been banned, according to one South Korean official, to ensure that the North Korean people's focus is entirely on the Party Congress and their leader, Kim Jong-un. Elsewhere in Asia, the Chinese Navy has begun combat drills in the South China Sea. According to state-run CCTV, 2 destroyers, 2 frigates, and a supply ship all set sail for the South China Sea, with moves also planned in the East Indian Ocean and the West Pacific Ocean. A 3rd destroyer is also slated to join the group, and the makeup of the group is leading to speculation that an aircraft carrier may be participating as well. CCTV described the drills as an annual exercise, which will also apparently involve troops stationed on the hotly disputed Paracel and Spratly Islands. Ni Lexiong, a military commentator based in Shanghai, said, China's best warships will be deployed in the South Sea Fleet as a response to the U.S. military activities, although both sides will carefully avoid any friction. It is a demonstration of muscle. In Europe, Spain's King Felipe dissolved parliament on Tuesday and signed a decree calling for a new parliamentary election on June 26. Spain has been without a functional government since December's election resulted in no clear majority and a hung parliament which has completely failed to form a coalition government. The political environment in Spain remains largely unchanged since the chaotic elections in December, so despite another round of elections, the outcome may be the same: another failure to form a government. The European Commission, EC, announced on Tuesday that it was cutting its growth forecast for the Eurozone, dropping its projections for GDP growth to 1.6%, from a previous forecast of 1.7%. The EC also cut its forecast for GDP growth in the year 2017 to 1.8%. The sluggish growth is adding fuel to the growing debate between Germany and the European Central Bank that its monetary policy moves are ineffective at best. Crude oil dipped into the mid $40 a barrel this week as investors cashed in on recent gains from oil's 20% climb over the last month. A raging wildfire in Canada's oil sands region around Alberta should have acted to drive prices higher as residents, a large portion of whom are oil industry employees, were evacuated. The fire and accompanying evacuations have resulted in 690,000 barrels per day worth of Canadian oil production being taken offline, and the impact could grow if the fire continues to spread. The euro began the week climbing against the US dollar, but had reached its peak by Tuesday, when it suffered a steep and sudden drop lower. The euro traded sideways through Wednesday but saw another decline on Thursday that sent it into a negative territory for the week. A sudden spike higher following the release of the U.S. Non-Farm Payrolls Report, NFP, could not maintain momentum, and the euro appears set to close the week lower against the US dollar. The Japanese yen saw a wild trading week, drifting lower against the US dollar on Monday, then surging briefly into positive territory on Tuesday before experiencing a matching surge to the downside that sent it lower against the dollar again. The yen drifted lower against the US dollar through Thursday in a series of surges and drops, but began moving higher on Friday ahead of the NFP. The yen still appears set to close the week lower against the US dollar following the release of the NFP. Friday's non-farm payrolls report, NFP, in the US seemed to set a somber tone in stock markets to end the week, as analysts and media pundits all absorbed the impact of the weaker-than-expected report. It is highly likely now, given the weaker-than-expected report and the upcoming referendum in the United Kingdom that is casting a pall of uncertainty over the global economy, that the U.S. Federal Reserve will not make a move to raise interest rates when it holds its next Federal Open Market Committee meeting to set monetary policy in June. A massive wildfire in Canada's oil sands region is threatening both homes and oil production sites as it continues to rage out of control. Failure to contain that fire could lead to another rise in oil prices, especially if further production must be taken offline due to the blaze. Oil production in the U.S. has continued to decline as prices have languished at current levels, and U.S. rigs that have been taken offline as a result will not likely be able to be restarted quickly enough to make up for this sudden decrease in production out of Canada, which may mean that some of the ongoing global supply glut might abate. In the lead-up to the June referendum in the United Kingdom that will determine if the UK remains in the European Union (EU) or not, British Prime Minister David Cameron is ramping up his speeches in an attempt to convince the populace that Britain's path remains with the EU. Mr. Cameron pointed out this week that there could likely be a decade of uncertainty if the UK chooses to exit and is forced to negotiate new trade deals with the other members of the EU. 40% of the UK's trade volume is accounted for by the other members of the EU, and the economic impact of trade delay while new agreements are negotiated could be staggering. In other alarming news, Barclays, one of the UK's largest banks, announced on Wednesday that it would offer 100% mortgages to borrowers if they had a helper contribution from a relative or guardian that was worth 10% of the purchase price of a property. Raheel Ahmed, the head of Barclays Mortgages, said in a media release, "With over a third of young people still turning to their family for help with buying a home, we have increased the accessibility of the Barclays Family Springboard Mortgage. We want to offer more people a way to get on the property ladder and to walk through the door of their first home earlier than they perhaps thought." Such a move smacks of the very lending practices in the U.S. that many blame for triggering the start of the current financial crisis. UK consumers also appear to be borrowing on credit at an alarmingly increasing pace according to the latest data from the Bank of England BOE. The BOE said that consumer credit in the UK grew by £1.883 billion last month, the fastest rise since March of 2005. Thus far, the BOE does not appear to be concerned that the UK consumer is piling up so much debt in such a relatively short time. Politics in the U.S. is likely to become even uglier as Donald Trump has now become the presumptive nominee for the Republican Party after emerging victorious in the Indiana primary this week. The exit of the remaining Republican candidates from the presidential race means that Mr. Trump can now focus solely on battling Hillary Clinton and Bernie Sanders, the two remaining Democratic candidates, in the lead up to November elections. With Hillary Clinton showing increasing signs that she might take the Democratic Party nomination, we expect stock market volatility to increase as the November elections approach and Ms. Clinton and Mr. Trump begin trading barbs and negative campaign ads. As political and economic uncertainty continues to grow, wise investors continue acquiring physical precious metals as part of a plan for a well-diversified investment portfolio, taking advantage of temporary price dips which effectively allow them to purchase more metals at a discount. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products, and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, May 6, 2016. Brought to you by Precious Metals International.